Hey guys, B Twice here. Today is Wednesday, July 21st. Hope everybody had a good day. We're going to be taking a look at SPY, QQQ, IWM, so the usual suspects, um, and then a handful of other stocks today. So, starting it off with SPY, another day, another pretty much another melt up. Still going a little bit higher than what I expected it to go on this initial wave to the upside. So, if you remember from a few videos ago over the weekend, um, I thought 428 would be bottom and that we'd rally hard off of 428. Ultimately, Monday happened and midday I tweeted that I thought the dip was a buy. And the reason I did so was because I saw a clear ABC move to the downside where I drew the circle. So I went long calls here, and then ultimately I sold them on the rally up right around here, around this 428, 429 range. Because that morning, on Tuesday morning, I tweeted, if we open up 428 plus, that I would be exiting because I didn't know if we would get rejected somewhere in here. Now, the reason why I was saying that is because in Elliott wave theory, when you have a correction, you're either going to have a 3 swing, which is an ABC, or you're going to have a 7 swing, which is a WXY, or you can have 11, which is a WXYXZ. So you always want to buy on these 3 swings or a 7 swing. You want to buy on a movement to the downside because you're almost guaranteed a pop to the upside unless there's like a major crash. And so that way you have minimal risk and you can get out of your position and scalp some and at least get some kind of profit. So with that being said, we entered the position on Monday after this drop because it was a clear zigzag to the downside. We had a 5-wave move down for A, popped up for B, and then we had a huge drop on Monday down for the C. So it was a clear entry day. The RSI here on this day was extremely oversold, so it had to pop. So it was a great entry to grab some weekly calls just to ride it up. I also bought into Boeing and a handful of others that ultimately ended up paying big because of the rally we saw. But basically, what I'm seeing now is that we've had a 5 wave to the upside, or we're working on wave 5. So we've had a 1, 2, 3, 4, 5. So now I'm starting to favor that the bottom was in at 14.6% retracement, even though that is the not as likely as a 23.6 or a 38.2. But just because of the melt up we're seeing, and I'm really really high on tech earnings next week, and I think that they're going to blow it out and actually and fly. And if Amazon and Apple and everything starts to rocket, then obviously it's going to carry the rest of the market with it. So I am kind of favoring this being a 5, but we're going to talk about both situations. So if this ends up being 5, meaning that it's a higher degree 1, we'll see a 3 swing, right? It might be small, maybe it's like this, but either way, we're going to see some kind of correction. We want it to be a decent size, maybe taking us back to the 428 range, because this is going to be a buy zone. So I'm favoring the white lines doing this, coming down to 428, somewhere in that range, and then ultimately launching to all-time highs from there. So this will be the next area to buy. So I'm not buying calls in this range. I bought here. I'm holding long term. I sold all my weeklies on the initial pump, but when I bought back here, I bought weeklies and I also bought stuff out in September that I didn't plan on selling in case the rally went higher than I expected, which is exactly what it's doing. But ultimately, I do see us having some downside. When we have this downside, we want to see a clear 3 swings, and hopefully it's kind of shallow. Maybe it's a 50% or 60% retracement. From there we go long and we look for all-time highs. So right now in this middle range where we really don't know what's going to happen, we do not take a position. We don't short. You can buy hedge on up days if you want. If your calls are starting to get a lot of profit and you're not taking money off the table, then you definitely want to buy hedge. But you definitely don't want to go full-blown short until we know what's going to happen. And you don't want to be going long after we're this extended. I'm not out here buying 440 calls for September after we just rallied off of 421. That would be idiocy. So with that being said, the bull count is saying, hey, we're hitting a 5 up here. We're going to have a 3 swing down, and then ultimately we're going to catch support and we're going to bet on it going back up. So hopefully this is what we see. Now the bears are saying absolutely not. This can be considered an A, B, and then a 5 wave move up for a C. Ultimately, that will mean that this is an X up here that we're approaching and not a 5. It means we're approaching an X. And if we're approaching an X, then ultimately what we're going to end up seeing is a zigzag to the downside. We're going to see a 5-wave impulse, 3 waves up, and then a 5-wave impulse. If we see that, it's going to take us down here to this 410 range. That's going to be somewhere around that 23.6% retracement. It could be 415 somewhere in here. But either way, the bears are saying, hey, we're not going to break all-time highs and that we're going to head lower. So I think we're going to see our move to the downside before we break all-time highs, just to confuse traders. Because if we break all-time highs, then there's a good chance people are going to buy the dip a little bit more. But I think we're going to fall a little short, and then we're going to see a big flush. And I ultimately what we're looking for is three waves, right? So if we see a three swing down here, we're buying. If we see one impulse down to this trend line or something like that, we're not buying here. We're not buying here. We wait until we see three swings, and then that's where you buy to go long. Either way, all-time highs are coming. It's just a matter of, are we going to see us going down into this like 415 range before we go to all-time highs, or are we going to catch support at 428? Like I just said previously, I do favor the bull count. I think we'll catch support at 428. I don't think we're going to head back down to the 415 range, but time will tell. So let's look at this RSI. So I drew this RSI, I think yesterday or the day before, and basically I showed that it was bullish because we broke. So we were on a bearish RSI downtrend. We broke above it. Now look what it's doing. It's actually started to act as support. So if we break below that, then that would be bearish. So as we're watching this downswing, we also want to watch this RSI trend line. Okay, enough rambling on SPY for now. QQQ, I'm not going to waste my time as much with because it's kind of the same. I don't like that that big tech was kind of lagging today. That makes me nervous. Hopefully Amazon, Apple, and that stuff will start to rally. But basically, what the bulls are seeing, same thing as SPY. The bulls are saying, hey, this is a 5, which is a higher degree 1. We're going to have a 3 swing down. This is going to be a spot to buy here, and then ultimately we're going to launch higher. The bears are saying, nope, we're going to have a zigzag. We're going to have a 5-wave impulse. It's going to be very strong. It's going to be down somewhere into the 355 range. We'll pop to the upside, and then we're going to have another impulse down that's going to take us somewhere into like the 345 range. If we do follow the bear count on QQQ, I do think we will go to about 345. I don't think we'll break this support right here. I think that this is strong support and we'll hold it, but ultimately that's the target. So I am long QQQ for September calls. I don't have any short-term stuff because I have a lot of tech options. So for me, there was really no reason except for the fact that, obviously we should see all-time highs here very soon. Okay, so that's QQQ. Let's look at IWM. And you can also see the same thing with the RSI here, that it's acting as support. Okay, well, that's not going to work. Okay, IWM. All right, so IWM, I went back and recounted. And what I'm actually seeing is that we've now bottomed for our wave 4. So let's go to the daily real quick just so you guys can see it. So let me zoom in on this for you guys. Okay. So I'm seeing that we peaked for a 3. Before I saw this down here as being our wave 4. I'm not seeing that anymore. I see a 3-wave move down for a W. We popped up for an X, and now we ultimately went down for our finishing move on our Y. So now let's go to the hourly so we can check out what could potentially be happening. So after I saw that this started to look like an impulse, I actually took another gamble and got into IWM. But I've already taken profits. Now, why have I taken profits? So I'm seeing a 5-wave to the upside. Like, we're going up for wave 5 right now. It could extend higher. Maybe we hit 225 or so. But when SPY and QQQ get rejected, I expect that IWM is going to get rejected as well. When that happens, we should see a 3 swing to the downside, and that's going to be the best buy area. A lot of people are talking about small cap summer. Oh, it's going to rally. I still am high on the small caps because I did think that they were extremely beat up. So we're going to wait for a 3 swing down, and that's going to be our entry right here. Okay, so let's take a look at some stocks. So we're going to start off by looking at Square. So Square's been rallying. I tweeted earlier today that, buy the dip, sell the rip. I've been taking profits on Square because it's just been face ripping rally after face ripping rally. What I see right now is that we're going up for a 1. I still do have a position. I'm long shares, and I still have half my position in calls. But ultimately, what I think is going to happen here is we're going to get rejected very soon when the indices have a little bit of a pullback. We're probably going to get a relatively decent sized dump on Square. It may take us back into this 240 range. That's going to be the buy zone. I didn't drop, but we're going to look for a 3 swing down, and then that's when we're going to get back into Square. And that's why I say buy the dip, sell the rip. You buy the dip. So like on Monday, we bought the dip, and then as you're ripping the next couple days, you sell into that strength, and then you wait for your pullback to get out. So like right now we're going up for a 1. So we're going to pull back for a 2, and then this is going to be a big move for a 3. So that's why we want to look. And obviously, as you're going up very fast, today was a 5% gain day. If you're holding calls, if tomorrow is only up, 0.5%, you might lose money just from volatility dropping. So buy the dip, sell the rip. So all dips are buys on Square, but we want to see a 3 swing to the downside before we get in. All right, so let's take a look at Airbnb. Okay, so Airbnb. So what am I seeing here? We'll just ignore this for now. I do think we've bottomed. That's why I didn't bother deleting off this other stuff, so we'll ignore it. But basically what I'm seeing is that this entire structure right here is a 1 and a 2. Not only did we bottom at the 85.4% retracement, but this is all the 100. This is also the 100% extension off this ABC move to the downside. So that tells me that there's a really good shot that this was bottom. Shame on me for not looking at it. I had one of the subscribers constantly talking about Airbnb. This would have been a great dip buy stock, obviously, we've seen over these last few days. But now, what are we seeing? Well, we're starting to see an impulse to the upside. So I don't know how high this impulse is going to go, but eventually it's going to top. And once it does, we're going to see a three-wave move to the downside. We're going to wait for that dip to buy. We're not buying in on a 2.5% gain day. We're buying in when, even if it's only negative 0.5% or a percent, whatever, those are the days we're buying in. And we're going to go long Airbnb, and we'll see our price target at that point. Because once we know our peak for our wave one, we don't even need to see the entire move to the downside to start getting price targets. So you can get some conservative price targets so you know what kind of options to buy, and then just buy yourself some time so you don't get blown out. But ultimately, we're going to let this rally finish, pull back, and then we're going to buy that pullback. Okay, so we're going to look at Autodesk real quick. Okay, so patience finally paying off in this one. I'm going to go to the daily so we can see it a little bit better. So I've been screaming about Autodesk for weeks and weeks, it feels like. And I've just been waiting for a breakout. Finally, we're getting that area. So I drew this this resistance a few weeks ago when I did a video and said if we can get above that, then we should fly. So anybody who's not in Autodesk, if we get a retracement back to this, which is going to be support, if we get a retracement back and we backtest that, I would recommend getting in. I see this stock going to 320 here in short order. From there, we'll get a pullback, another entry, and then ultimately we're going to be going up to the 350 range. This is a very slow moving stock. It's not a lot of volume. I think it's like less than 1 million shares on average per day. So with that being said, it moves very, very slow. But even on Monday when we dipped, we did not break this downtrend line. So we were in this downtrend, we broke above it, and then obviously on Monday we went to it, we still closed above it, we showed strength at the 50-day moving average. So I don't think Autodesk is going to go back below this. If we're lucky, then we'll be able to double down on our position on a pullback. But yeah, patience definitely is starting to pay off on this one. Okay, so let's take a look at NIO. We're going to look at the hourly to make it a little easier to see here. Okay. So there's two different things I'm seeing. I do favor the bull count, but basically what I'm seeing here is that this whole impulse up was a 1, and we're in the process of pulling back from a 2. We may not have bottomed. Now, I do believe we have bottomed because we basically touched the 61.8% retracement, and I'm also seeing a zigzag, a W and or a WXY because I see a zigzag. We pop up for an X and we pull back down for another zigzag for a Y. So with that being said, I think we're in a 5-wave move up for a 1. We'll pull back for a 2, and then ultimately we're going to be going to all-time highs. So the bulls, including myself, think that this impulsive rally that we're going to see over these next few months is going to take us to all-time highs. I want to say it's taking us somewhere up to the $80 range, and that would be our white wave 3. So with that being said, the bears disagree with me. The bears are saying, hey, no way, we're going to get rejected, we're going to head lower, we're still in a correction, we're basically in a WXY, we're popping up for an X, and then we're going to ultimately pull back for a Z. The bears see us going somewhere around the $35 range or so for a bottom, possibly even lower if they really don't like the stock. With that being said, I'm not favoring the bear count, but we'll see what happens. All right, the last one we'll look at is CCIV. So CCIV is one that recently I've done a lot of videos on, and I was wrong. So, or at least I think I was wrong. So let's take a look at this. So basically what I was showing before is that I was pretty convinced that this was a wave 2 bottom right here. I was convinced it was a wave 2 bottom based on the fact that we caught support to 85.4% retracement. And now with that being said, it still could be a wave 2 bottom. Let's talk about why my count was invalidated. Originally where we were going up for this, that what I'm calling an A now, I had it labeled a 1. I had it us pulling back for a 2 where this B is, and then I had it a 1-2-1-2 nest. This was another one pulling back for another 2, and then ultimately we'd be in a wave 3 of 3, and we'd see a serious launch pad off of that. With that being said, this purple line that I've drawn right here was my invalidation. On Monday, what happened? Mind you, this is a bullish candle. But at the same time, we broke below my invalidation, meaning I can't call this an S. I can't call this a 1 and a 2 followed by a 1 and a 2 because this 2 went beneath this 2. So that's invalid. So then I had to go back to the drawing board. What am I seeing? Okay, well, then the only way I can label this is a 5-wave impulse up for an A, 3 swing down for a B, 5-wave impulse up for a C. So that can still be considered a wave 1. So this right up here could be a wave 1, and then we could be pulling back for a 2, and maybe we've already bottomed for our 2, and ultimately we're going to see an impulse to the upside. That's what we're waiting to see. Or this could be an X. And if this is an X, then we're in the process of pulling back for a W, and then we're going to have a WXY to the downside, meaning that we're going to pop a little bit back up, and then ultimately we're going to be heading lower. So there's some levels that I've drawn on this chart because I'm kind of in the middle on here. I really don't know which way to go. So I'm not taking any trades, meaning I'm not buying options on CCIV right now. I like CCIV long term, so I still think that dips are a buy. I'm still holding. The fact that I don't really see where this is going right now is not making me sell my position because there's a lot of times with wave theory or technical analysis in general, you just really don't see where it's going because sometimes you can't tell what the pattern is until it's halfway done or 2/3 of the way done, right? So a lot of times if you don't know what the pattern is, you just don't take a trade. Now that doesn't mean you don't invest for the long term. I like Lucid as a company, so I'm invested for the long term. It just means I'm not out here trying to scalp options because I don't see directionally where it's going to go. So let's talk about these levels I've drawn. So I've drawn a resistance line in this purple line up here where my very first X is. So what is that? So that's where the bulls need to break above. It's $33. If we can break above that line, that's telling me that our correction's finished and that we're going to look for a bull count off of that. Obviously, our last peak didn't break that. So the bulls really want to get above this resistance. Now, what are these other lines? This was my invalidation line. Obviously, it looks like it's support. We bounced off of perfectly off of the 61.8% extension. So if you take an extension off this peak from X down to Y, and then you take it up here off of where I have this white C, you can see we hit the 61.8% extension and bounced off of it hard. So right here, this basically $21 a share is strong support. So right in this range, we have some strong support. So the bears want to see it break this. If it does break this, the next level of support is going to be the 200-day moving average. It's going to be right around $20 a share. If we break that $20 a share, you better believe we could go all the way down to all-time lows, which is 17 a share. I don't think that's going to happen. I still think if there is more downside from what we've currently seen, that maybe we'll find bottom right around this 200-day. I don't see CCIV going less than 20 a share unless some seriously negative news comes out, but it is entirely possible. So with that being said, I still like long-term investing on CCIV, but I do not specifically see in terms of wave theory where this is going and where the possible price targets would be. So that's all I got for today, guys. If you like these videos, go ahead and hit like and subscribe.